Hey everyone, this is June from Turning Point Live Investment, and this is your market analysis for March 27th, 2010. Okay, let's start with the SPY 5-year weekly view. Now, the reason why I want to start with a weekly view is just kind of take a look at the market from a long-term trend. The first thing you want to notice here is that within these last 2 weeks, something's different about the candlesticks. The candlestick body is actually smaller, telling us the volatility has decreased. And at the same time, we're seeing a couple of long upper shadows. Now, long upper shadows isn't necessarily a bad thing, but when you're trying to make an uptrend, it's usually not a good sign. It tells me that the bulls were able to push higher, but they were unable to hold those new highs. So you can see how these last 2 weeks we made a new high, but the prices were unable to sustain itself. It's kind of different from these large white candlesticks, which is something you want to see if you're bullish. You want to see large white candlesticks, meaning strong bullish momentum, and prices being able to close above or near the high. But here it's something that's different. It's actually closing near the midweek. Okay, next we go into the daily view. Now on Thursday, I would say Thursday is probably a pivotal point in the market where even though the market shot up, gapped up, and made a new high, it was quickly sold into, and that's something that you don't want to see if you're bullish. And it created a huge bearish engulfing pattern that pretty much erased 2 days worth of gains. Not to mention that we're starting to come out of this overbought and major MACD divergence, which has been the story for, I don't know, the entire month. So overall, I've mentioned this before, I'm going to say it again. I still expect the pullback to happen. So around this 11, or I should say 115 level is still where I'm expecting this market to pull back towards, especially with this 20-day moving average. Anything deeper, probably around this gap area, around 113, and that's also where that 50-day moving average is. So first target around 115, second around 113. A clear break above 118 obviously tells us that the market isn't ready to pull back yet. So overall, just expect these two pullback levels. The other possible scenario is, well, the market can just simply go sideways. Okay, so that's also a possibility. Don't rule that out. Okay, and lastly, let's go into the VIX. You can see how the VIX is actually showing some bullish divergence here, where the market is making new highs, but yet the VIX is starting to go up. Okay, and that's bullish for the VIX, but that's usually bearish for the market. So, and especially with the VIX being so low, it hasn't been down at this level since almost 2 years ago. That's actually very bullish for the market. So usually when the market is too bullish, that's the time to bail out. So overall, just be cautious if you still want to go long. I'm still holding on to my view that the market can still experience that pullback around the 115 here.